PiNetwork is one of the most talked about projects in the crypto space, boasting a massive user base and a unique mobile mining approach. However, its current price predictions and real-world trading history suggest that reaching $1,000 per token is highly speculative and would require extraordinary circumstances. Below is an in-depth analysis of the factors that could, in theory, propel PiNetwork's price to such heights, alongside the challenges and current market realities. Massive global adoption user base. Expansion, PiNetwork already claims over 50 million users. For Pi to reach $1,000, this user base would need to multiply, with millions actively transacting, holding, and using Pi in daily life. Mainstream acceptance, adoption by merchants, integration into payment platforms, and use in remittances or as a store of value would drive real-world demand. This level of adoption is rare and has only been achieved by a handful of cryptocurrencies like Bitcoin and Ethereum. Real utility and ecosystem growth. Diverse use cases. The PI ecosystem would need to support robust decentralized applications, dApps, including DeFi, NFTs, gaming, and e-commerce, driving demand for the token as a utility asset. Partnerships, collaborations with established businesses, fintechs, and governments could create new use cases and increase the token's legitimacy and necessity in various sectors. Scarcity through supply management. Strict circulating supply controls. For PI to reach $1,000, the circulating supply must be tightly controlled. If the total supply is vast and most tokens are unlocked, it becomes mathematically difficult for the price to reach such a high valuation. Burn mechanisms. Implementing token burns or locking up tokens in smart contracts could reduce supply and increase scarcity, similar to what some other cryptocurrencies have done to boost price. Major exchange listings and liquidity top-tier exchange listings. Official listings on major exchanges like Binance, Coinbase, or Kraken would bring credibility, liquidity, and access to millions of new investors. Institutional investment. Attracting institutional investors and large funds would inject significant capital into the ecosystem, potentially driving up the price bull market and speculative frenzy crypto bull run. A strong market-wide bull run could lead to speculative mania, with investors seeking the next big thing after Bitcoin and Ethereum. In such environments, prices can become detached from fundamentals, at least temporarily. Media hype and FOMO. Viral marketing, social media trends, and influencer endorsements could drive massive retail investor interest, further fueling price surges. Technological breakthroughs and innovation. Superior blockchain. Technology. If PiNetwork's blockchain proves to be faster, more scalable, or more secure than competitors, it could attract developers and projects, increasing demand for the native token. Unique features. Innovations such as seamless mobile integration, energy efficiency, or interoperability with other blockchains could set PI apart and justify a premium price. Regulatory clarity and compliance. Global regulatory approval. Achieving compliance with major regulatory bodies would enable PiNetwork to operate freely in key markets, increasing adoption and investment. Avoidance of legal issues. Steering clear of regulatory crackdowns or classification as a security is crucial for long-term survival and price appreciation. Challenges and market realities. Despite the above factors, several challenges make a $1,000 price target extremely unlikely in the foreseeable future. Current price predictions. Most credible forecasts for 2025 to 2030 place PI's price between $1 and $10, with some outlier predictions suggesting $500 to $900 in the distant future, but these are not mainstream views. Uncertain tokenomics. The exact circulating supply, inflation mechanisms, and distribution remain unclear, making it difficult to assess the true potential for scarcity and price appreciation. No major exchange listings. As of now, PI is not listed on major exchanges, and its real-world liquidity and price discovery are limited. Regulatory risks. The lack of regulatory clarity and potential for future crackdowns pose significant risks to adoption and price stability. Speculative nature. Much of the current value is driven by speculation, not by underlying utility or adoption, making the price vulnerable to sharp corrections. While it is theoretically possible for PiNetwork to reach $1,000 per token, it would require an extraordinary convergence of factors: global adoption, real utility, strict supply controls, major exchange listings, a powerful bull market, and regulatory clarity. Most current forecasts and market realities suggest that such a price is highly speculative and unlikely in the near to medium term. Investors should remain cautious, focusing on fundamentals and transparent information as the project evolves.